So this may be something that's kind of at the back of your mind because you're just trying to focus on buying a house, but maybe a little bit of you is curious exactly what effect that'll have on your credit score. Well, in today's video, we're going to tell you what kind of effect you can really expect in the short and long term.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting, you'll spend it and be broke again.
So welcome back to our channel, guys. You're here with your two bros, Ryan
And Taylor.
And in today's video, we're talking about how owning a home or purchasing a home can affect your credit score in the short term and long term. So let's start with the short term.
So I'm sure a lot of you guys are aware that buying a house is a lot of people's dream or goal. It might be yours. And in the short term, it can be a little bit intimidating maybe. And frankly, when you look at it from a credit score perspective, there can be oftentimes a slight dip because it is a hard pull on your credit and it is a big stream of debt suddenly appearing. So sometimes you can expect a dip of anywhere from 5 to 40 points. Hopefully this is temporary. So, it's not anything to go crazy about. It's not even as bad as missing a payment a lot of times.
So yeah, just like Taylor said, other credit bureaus, banks and such are going to look at that and go, oh, he recently applied for new debt. So of course that makes sense. But for some good news, owning a home can very much help your credit score. For one, you're now showing, as hopefully you're making your payments on time, you're now showing you can make payments on a different form of credit for a long period of time. So that history really builds up and shows every month a fresh new payment that you're making on time, which is great. And two, like I kind of said a second ago, you're introducing a whole new form of credit. It's mixing up your credit. So now banks can see, oh, he's got credit cards and he's got a house mortgage and he's got car loans, personal loans, whatever else. So he can not only do credit cards, but he can also do many other types for many, many years. That's a really healthy borrower. So that can, in the long term, really help and boost your credit score.
Yeah. And just as a general kind of piece of advice, we'd say typically you'd want to just automate your mortgage. That way it's not, something that you can really forget because, buying a house is a new experience for a lot of people. So maybe you're not used to shelling out thousands of dollars every month. So you just automate it. That's how I handled it. That way, it's just automatically out of my account. I don't have to remember doing it or anything. It's on time. Obviously, initially, you probably want to keep an eye on it because sometimes automatic payments can kind of get a little messed up, or sometimes maybe your lender sells off your mortgage and everything. So sometimes you'll have to switch to where you're paying. So keep an eye out on the mail and just that kind of thing. But in general, you can kind of just automate that. And then one little side note that we just wanted to include in here is typically you might want to avoid taking on brand new debt either right before or right after a mortgage. Because if you're suddenly making other hard inquiries before you sign your mortgage and get your rates and everything, it's not going to look good. And suddenly your rates are going to shoot up right before closing and everything. So avoid that. And then right after, you just had a big new inquiry with a mortgage. So you typically don't want to come in with a bunch more right after that because that can drastically drop your score because they're like, oh gosh, he's taking on a whole lot, huge risk, drop his score right now, like just bury it kind of thing. So typically you don't want to do that.
So yeah, this is a rather simple video, easy concept to understand. When you're buying a house, short term, your score might drop a little. There's no guarantee, but it might drop a little.
Yeah.
But in the long term, it can greatly help your score. Credit score, obviously, is for borrowing money. So you want a good credit score, especially when you're borrowing money to get a house. But other than that, once you're in the house, if you're not planning on applying for debt, that small drop in the short term is no big deal.
Yeah.
So just a quick, easy to understand video we thought we'd throw out there for people that were curious. If you have any questions, leave them in the comments below. If there's anything we missed, please let us know in the comments. Don't forget to like this video, subscribe to our channel. We'll see you guys in the next video.
Yeah. And if you guys want any tips on how to build a credit score leading up to buying a house, feel free to check out that video we got on our channel as well.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting, you'll spend it and be broke again.